Okay, so let's unpack this. It is Wednesday, February 4th, 2026. And if you were watching the markets yesterday afternoon, you probably got a pretty severe case of whiplash. I mean, I know I did. I was refreshing my screen thinking, wait, is this a glitch? We were talking, of course, about AMD's Q4 2025 earnings
A
report.
glitch is definitely the word a lot of traders were probably muttering. It was a very eventful afternoon.
Eventful is putting it mildly. I mean, look at the setup here. We've all been waiting for this report, right, to see if the AI hardware trade is still alive and kicking.
Mm-hmm.
And looking at the headline numbers, it seemed like a slam dunk. They posted record revenue, $10.3 billion for the quarter. They crushed analysts' expectations.
Crushed them. And the data center business is just absolutely exploding.
And yet, if you looked at the ticker in extended trading, you saw a sea of red.
A huge drop, around 17%.
Exactly. It feels like a total contradiction. You have these massive record-breaking numbers on one hand, and the market is essentially running for the hills on the other. So what does this all mean? Is this a classic value trap where the numbers look good but the business is rotting? Or is this the buying window that all the bulls have been screaming about?
And that is the mission for this deep dive. We have to move past those flashy headline numbers. We really have to figure out why the market is panicking. Because when you dig into the transcript and, more importantly, the footnotes of the financial tables,
Yeah.
there is a very specific story AMD is telling versus the one the market is hearing.
Right. And for everyone listening, whether you're holding shares, thinking about buying, or just trying to understand where the hardware for this AI boom is actually coming from, we are going to decode this. We aren't just reading a balance sheet here. We're trying to decode the signal from the noise.
Precisely. And to understand the panic, we first have to understand what actually went right. The story has to start with the star of the show.
The data center, I mean, this is the engine room right now. AMD reported record data center revenue of $5.4 billion.
Which is up 39% year over year.
It's staggering if you compare that to where they were just a couple of years ago. But here's my question. Usually when we talk AI boom, we're hyper-focused on the GPU, right? The AI accelerator. We all know NVIDIA is the king there. Is AMD actually making a dent with their GPUs, or is this revenue coming from somewhere else?
That is the nuance a lot of people miss. Yes, the Instinct MI350 series, their big GPU, is ramping up incredibly fast. But if you look closely at the report, the CPU side of the house is firing on all cylinders too.
The EPYC processors, right, the server chips. I thought the narrative was that CPUs were dead and GPUs were the new kings.
That's the popular narrative, but the engineering reality is different. Specifically, we're looking at the Turin and Genoa generations of chips. We often forget in the AI hype that you still need a very powerful CPU to run the show. They call them head nodes.
Head nodes. Okay, explain that for us.
Okay, think of the GPU cluster as a team of incredibly strong weightlifters. They can lift massive amounts of data. But they aren't necessarily great at planning or organizing.
Or managing the flow of traffic.
Exactly. You need a coach. You need a brain to manage the muscle. That's the head node. And AMD is seeing massive adoption here because their EPYC chips are just incredibly efficient at managing these huge clusters.
So paradoxically, the more GPUs you buy, the more high-end CPUs you need to buy to manage them.
You got it. It's not an either situation. AI lifts both boats. And the data backs this up. AWS and Google launched over 230 new AMD instances in one quarter.
That is a massive footprint expansion.
Huge.
That brings me to the customer list. I saw a stat that just jumped out at me. AMD revealed that 8 of the top 10 AI companies are now using AMD Instinct chips.
Right.
That feels significant. For the longest time, the bear case was nobody uses AMD for AI because the software is broken.
The CodeEV moat argument.
Yeah.
The idea that NVIDIA's software was so dominant nobody would ever switch. This stat 8 out of the top 10 proves that AMD's software stack, ROCm, is finally good enough.
So it's not just a lab experiment anymore.
Not at all. Companies are putting them into the live fire of production.
And speaking of live fire, there is that massive number dropped regarding OpenAI. Did you catch that?
Oh, yeah. The 6 gigawatt deployment.
6 gigawatts. I had to double check that number. That is a mind-boggling amount of power. I mean, that's roughly the energy consumption of a major city, isn't it?
It is. It's absolutely massive. They have a planned deployment with OpenAI using Instinct GPUs that represents a multi-year infrastructure commitment. It signals that the biggest players in the space, the ones defining the frontier of AI, they aren't just hedging their bets with AMD. They are building their future roadmaps on top of AMD silicon.
Okay, so let's pause. Let's look at the scoreboard. We've got record revenue. We have massive cloud adoption. We have a partnership with the poster child of AI, OpenAI. By all accounts, this company is winning. So why on earth did the stock tank 17%? Are investors just allergic to good news?
This is where we have to put on our forensic accountant hats. We need to look at the quality of earnings. There's a huge asterisk next to some of these Q4 numbers, and it revolves around China.
Okay, let's unpack this because I saw it sounded like a lot of corporate jargon designed to confuse people. What actually happened?
It was a bit messy, and if there's one thing the market hates more than bad news, it's uncertainty. So here's the breakdown. In Q4, AMD included about $390 million in sales of their MI308 chip to China.
Okay, 390 million, that's revenue, money in the bank. What's the problem?
The problem is how that revenue interacted with their previous accounting. There was a twist. They also released a $360 million inventory reserve.
An inventory reserve. Translate that for me.
So basically, a while back, AMG built these chips. But then export controls tightened up and they thought, well, we can't sell these to China anymore. They're worthless to us. So they wrote them off as a loss.
Okay, so the value on the books went to zero. They took the hit in a previous quarter.
Right. But then, surprise, they got a license from the government. Suddenly they could sell the chips. So not only did they get the cash from the sale, but they also got to reverse that previous write-off.
It's like finding a $360 million check in an old winter coat that you thought you lost.
Exactly. Which artificially boosts the profit margins on paper for this one quarter.
Aha!
AMG reported a non-GAAP gross margin of 57%. That is a fantastic number. Wall Street loves 57. But if you strip out that one-time event, the China sales and the reserve release, the margin would have been 55%.
55 versus 57, that's a 200 basis point difference. In the world of high finance, that's the difference between we're becoming more profitable and our profitability is flat.
Precisely. It changes the narrative. And the concern is sustainability. The management was asked about the outlook for China, and they basically said they're forecasting about $100 million in China sales for Q1 2026, and then zero.
Zero. They're just assuming the China market completely evaporates.
Effectively, yes. They're assuming zero for the forecast because the export control risks are so dynamic. So the market looks at Q4 and says, wait, you beat earnings? But a huge chunk of that profit was a one-time accounting benefit from a region you're about to stop selling to entirely.
I see. It creates a quality of earnings crisis. The underlying business is strong, but the Q4 optics were just juiced by this one-time event. It feels a bit like a sugar high.
That is a perfect analogy. It was a sugar high,
Strict high.
and now the market is dealing with a sugar crash.
Okay, so that explains the margin anxiety. The accountants are unhappy. But AMD isn't just a data center company, right? I mean, my laptop right now has a Ryzen sticker on it. What's happening on the consumer side?
It is a tale of two very different cities right now. If we look at the client side, that's PCs and laptops, is actually a huge winner. Revenue was up 34% to a record $3.1 billion.
Wow, 34% growth in PCs. I feel like everyone has been saying the PC market is dead for the last 5 years.
Far from it. The Ryzen processors are dominating. And what's notable is who is buying. Commercial PC sales selling to businesses grew over 40%. That is a very sticky, lucrative market.
This is the corporate refresh cycle kicking in.
It is.
And is this the AI PC thing, or is that just marketing fluff? I keep hearing that my next laptop needs a neural engine, but I'm still not sure why.
It's becoming real. They mentioned the Ryzen AI 400 and Ryzen AI Halo platforms. These chips have dedicated neural processing units, NPUs, built in. Right now, it might feel like marketing, but businesses are future-proofing. They know that in 2 years, they'll want to run real-time translation, local data analysis, advanced security agents directly on the device.
Without sending data to the cloud. So the boring old corporate laptop market is actually a growth engine. But then we have the loser of the quarter. And I say this with a heavy heart as a gamer because I love my console. But the numbers look rough.
The gaming segment.
Yes.
If you're an investor who loves consistency, this section was painful to read.
How bad are we talking?
Well, gaming revenue was technically up for the full year of 2025, but the guidance, that's what hurt. They're predicting a significant double-digit percentage decline for gaming revenue in 2026.
Significant double-digit decline. That is corporate speak for sales are falling off a cliff.
We have to look at the context, though. We are in year 7 of the console cycle. Think about the PlayStation 5 and Xbox Series X. They launched a while ago now.
Right. If you haven't bought a PS5 or Xbox by now, you probably aren't going to buy one. You're waiting for the next generation.
Exactly. It's purely cyclical. People stop buying the old hardware as they anticipate the new stuff. So AMD's revenue from those semi-custom chips just drops naturally. We're in the valley before the next peak.
Is there any silver lining there for the gamers? Or for investors looking at this segment wondering if it's just dead weight?
There is hope. They confirmed the new Steam machine is shipping early this year. That opens up a new niche. And, more importantly for the long term, work is progressing well on the next-gen Xbox for a 2027 launch.
2027. So we just have to weather the storm for about 12 to 18 months in gaming. So basically a gap year.
That's the reality of the cycle. But it does drag down the overall revenue growth for 2026, which is another reason the stock took a hit. When one of your four main pillars is crumbling, it drags down the average.
Okay, so we've got confusing margins from China causing trust issues and a slump in gaming dragging down the top line. But let's pivot to the future, because Lisa Su and the team spent a lot of time talking about 2026 and 2027. They didn't sound like they were panicking. They sounded aggressive.
They did. And this is the part of the deep dive where we need to really pay attention. The mission is what they're calling a supercycle. They have a goal to grow data center revenue by more than 60% annually for the next 3 to 5 years.
60% annually. Compounded. That is incredibly aggressive for a company this size. How do they even plan to do that if they're just selling chips?
That's the aha moment.
Right.
They aren't just selling chips anymore.
Yeah.
This is the strategic pivot that I think the market is underestimating. They are moving to sell the entire rack.
The Helios platform, I saw that name thrown around.
Yes, the Helios rack scale platform, launching in the second half of 2026.
Break that down for us. Why is selling a rack different than selling a chip?
Think about it like this. If you sell a car engine, you make a certain amount of profit. But if you sell the whole car, the chassis, the wheels, the interior, you make way more money and you control the whole experience.
Right.
Up until now, AMD sold the engine, the GPU. But with Helios, they're designing the compute trays, the networking interconnects, the cooling systems, the whole refrigerator-sized unit.
So they are capturing the spend on all those other components.
Exactly. It captures way more value. And critically, it solves a problem for the customer. These AI clusters are getting so hot and so complex that companies don't want to piece them together themselves. They just want a plug-and-play solution.
Which is what NVIDIA has been doing for years with their DGX systems.
And AMD is finally entering that arena.
And that includes the new MI450 chips, right?
MI450 is the engine inside those Helios racks.
And looking even further out, they confirmed the MI500 series for 2027. And they dropped a little technical detail. It's built on a 2-nanometer process. Why does that matter? Is it just a smaller number?
It changes the physics. Going to 2 nanometers is the bleeding edge of semiconductor manufacturing. It means you can pack significantly more transistors into the same space. More transistors means more compute power and, crucially, better energy efficiency. And when you're deploying 6 gigawatts of power like OpenAI, efficiency isn't just a nice-to-have, it's an economic necessity.
And to back that up, they've set a revenue target of tens of billions in AI revenue by 2027.
Tens of billions, plural.
That is a bold forecast. But the big question with all of this, and we saw this in 2024 and 2025, is supply. It's great to have orders, but can they actually make enough of these complex systems?
That was a major topic on the call. Management was very explicit. They said they have secured the supply chain, the HBM memory, the wafers, the advanced packaging, to meet this aggressive ramp. They're claiming they won't be supply constrained in the same way the industry was previously.
That's a risky promise to make. If they miss that, the market will crucify them.
It is high stakes. But if they locked in the contracts, that removes a huge bottleneck. It means if the demand is there, and with 8 of the top 10 AI companies on board, it seems to be, they can actually fulfill the orders.
So let's try to bring this all together. We started by asking if this drop was a trap or a buying window. We've got a messy Q4 with the China accounting quirk that scared off the tourists. We've got a gaming business that is essentially hibernating until 2027. But then we have this massive roaring engine in the data center with a clear roadmap to 2-nanometer chips and rack scale systems.
If you zoom out, what we're seeing is a massive pivot. And pivots are painful. AMD is successfully transitioning from being a PC and gaming company that sells some server chips to a data center first company.
And the market is punishing the messiness of that transition.
Exactly. The stock drop seems to be a reaction to the messy margin optics and the weak gaming outlook. It's looking at the past and the present. But it might be ignoring the sheer size of the pipeline building for late 2026. The Helios launch and the MI450 ramp are the real story.
So the thesis is, ignore the gaming slump, ignore the China accounting noise, and focus on whether they can sell racks in 2026.
That is the bet.
Before we go, I want to circle back to something you mentioned earlier about CPUs. We kind of glossed over it, but I can't stop thinking about it. We usually think of CPUs as the boring part of the computer.
Right.
You buy it because you have to. But you hinted that in this new AI world, the CPU might actually be more important than we think.
I think this is the sleeper story of the next 5 years. We're hearing a lot about agentic AI.
Right. We've moved past chatbots. We're talking about autonomous AI agents that can perform tasks. Go book me a flight, plan the itinerary, and email my boss.
Exactly. That's the goal. But think about what that requires computationally. It's not just predicting the next word in a sentence, which GPUs are great at. It requires planning. It requires logic. It requires branching decision trees and managing complex workflows.
And that's what CPUs do.
That is exactly what CPUs are designed for. Current research suggests that these agentic workflows require massive amounts of traditional CPU power to manage the tasks and orchestrate the GPUs.
So if agentic AI takes off, the head node isn't just a traffic cop anymore. It's the brain.
It becomes the bottleneck. If you have a super fast GPU but a slow CPU, your AI agent can't think fast enough to keep up.
And AMD is currently the leader in high-performance CPUs with EPYC.
The undisputed leader. So the market shifts toward agentic AI. The demand for these high-end CPUs could be far higher than anyone is predicting. The market assumes CPUs are a commodity. But in an agentic AI world, they might be the crown jewel.
So while everyone is fighting over the GPUs, the boring CPU business might be the sleeper hit of the AI era?
It's very possible.
That is a fascinating angle to consider. The boring stuff might just save the world, or at least the portfolio. All right, that's a wrap on our deep dive into AMD's Q4 2025. It's messy, it's complex, but it is definitely not boring.
Certainly not.
Thanks for listening. Go digest that Helios concept, maybe pour one out for the gaming division, and we'll catch you on the next deep dive.